I can see I have a challenge here. So TLM, so Ismail has taken us up to the increase. Now, though, we're beginning to see a plateau, and we're beginning to see a little bit of a dip. What's going on here with this curve? Oh, yeah. Yeah, he gets to keep his own, and everybody else has to share. No, I'm joking. Okay. Patrick, do you have a microphone on your? Okay, we'll share the two of you. Okay.
It's working, right?
That works.
Yeah. Okay. I think if you look at the graph itself, you'll see that the plateau is already there.
Okay.
And that could be due to many factors. I think many of these factors have been mentioned by Ismail. And I think that generally is what is happening in the market. But if you look at historically, the major usually the substantial fall in the market is actually triggered by events outside Singapore. Okay. The economy of the world and whatever, and also things that I would say in the sense beyond our control. So in the past, you will see that in the Asian financial crisis in 1997, there's things that are beyond our control. The SARS, the dot-com bust, and also the recent global financial crisis. I think these are all major factors that affect the market in the sense that cause a pause in market and lead to a fall in the near future, if that happens. Of course, the cooling measures by the government does have an effect, but I would say that that is only moderate. As you can see that despite all the cooling measures that came out over the last 2 years, you'll see that the market have actually still moving on. Although at a slower pace, the prices has not actually dropped. Okay, I think that is very important. And I think as so long as the economy is positive, although we are saying that this year you are looking at a 1 to 3%, that is still positive growth as far as I'm concerned. So the sentiment is not really that adversely affected as compared to the Lehman Brothers crisis, where all hell broke loose, and people are just throwing off properties. They are in negative gearings and things like that. So in a sense, I would say that unless the Eurozone problem escalates and there's no solution to it, and that will affect Singapore definitely, and then our economy will be affected to a certain extent or to a big extent, and led to let's say a recession or whatever, and then you will see again another sentiment problem here, and then that would definitely lead to a fall in the value. That's my view here.
Okay. So Patrick, as a CEO, you doing your business planning as 2012 goes forward? You see a little bit of a plateau and a little bit down. Are you looking at it from do you look at it from the macro perspective? Would you agree with Hamish that a lot of what's going on in the market is a direct reflection of what's going on with Singapore GDP, what's going on in Asia, what's going on in China, et cetera, et cetera? Or how do you look at what's going on as you forecast your own business planning?
I think the important thing to take note of is at any point in time in the property cycle or the economic cycle, there will be companies that make money, there will be a salesperson who do very, very well. And if that happens, there must be a reason for doing that. I think if all of us can understand the reasons and duplicate those reasons, there are no reason why we should not do well in this business. And I always say this, that sometimes during good times and bad times, the best time to make money is actually during the harder times. The key to remember, I think, is not about the market share. Sorry, the key to remember is not about the market size. The key to remember is about the market share. So my perspective of the challenging time, the uncertain times, the unpredictable times, some of the words that have been used to describe times like this, is that in those dark clouds, there are tremendous silver linings. There are new businesses, new opportunities, new markets that you and I can tap on. And in times like this, we will see a new generation of top producer rising from it. So we are pretty optimistic, and we're excited, we're investing, we're growing this business because of such times.
Right. Okay. Dennis, how do you, when you're looking at this curve, what type of indicators are you looking for in terms of trying to assess whether the market's going to go up or the market's going to go down? Because, obviously nobody can predict the future, but as business people, we have to at least make an assessment so that we can, plan our resources, et cetera, et cetera. How do you look at this graph, and typically what do you look for in determining whether you expect the market to go up or down?
Okay, my point of view is that the market will just remain like this because when I was a selling person during my time I sell the real estate, when the first Gulf War occurred, it was really a showdown period between the buyers and the sellers because it was war, the Gulf War. But after a while, after just a couple of months, human beings got a short memory. They forgot about war and then they start buying and selling again. So on the second Gulf War, nothing happens because our buyer sentiment says, hey, he's too far away. so he doesn't bother us anymore. So for this plateau, it will remain like this for a while, and I believe because of the Singapore is only an island and our government is a business-like government, whatever it takes, they will never crash it down. So it will remain temporary like this. And I feel that it will go up.
Right.
Because depends who you ask. You ask a pessimistic fellow, you say he will go down. You ask an optimistic, he will go up. So I'm an optimistic guy.
Yeah.
So this is my point of view of Singapore properties. Because our late Ng Teng Fong said this, no?
Right.
If there's a dot in that country, you buy that dot because that dot is the one who's going to make you make money. That's what I feel strongly. Yeah.
So you look for the opportunities then that don't necessarily stand out. You're saying you buy the dog and then you make it conversion, make it good. Is that? But basically, you believe in the fundamentals of Singapore in the long run. That there may be a little bit of a plateau. It may go down a little bit. May go down up a little bit. We can't predict the market, but you believe in the fundamentals of Singapore. That it is an island nation, so there is a limited supply and demand, which of course will help. Well, a limited supply will help raise prices, but also the nature of the way the government and the country functions, that it's a long-term prospect, good prospect.
Yeah. I agree with Ismail about the whole thing has changed because if you people who read books of economics, I think they must start reading Freakonomics. It's a freaking world.
It's a good book. Okay. Are there any other comments on this picture before we move on?
I think coming back to your question about how to interpret the market, I think what Ismail says is correct. Sentiment is important, but sentiment will not go into total frenzy for a protracted period of time. Sentiment can only drive the market to a certain degree. Finally, we must go back to the fundamentals. I think there are basically 5 areas that are very key to interpreting the market. Number one is we have to go back and look at macroeconomics because Singapore is one of the top 5 globalized cities. Whether we like it or not, we are plugged into a global economy. Whatever happened in the West, particularly with the Europe debt crisis, whether the coming election will create some surprises for us, whether China is going to have a soft landing, whether Japan is going to transform the economy, will have an impact on Singapore. Secondly, we still have to look at second and thirdly, we have to look at the supply and demand factors. And as far as the supply factor is concerned, I think one of the reasons why the market has plateaued is as of fourth quarter of 2011, as far as the government land sales is concerned, we're hitting like 78,049 units, which is one of the high points of the oversupply situation. So the government is tweaking right now the supply equation. They're also tweaking the demand equation by making it harder for foreigners to access our market. And the fact that they have also increased the income ceiling of people buying BTO flats, for example, have also shaved off some demands from the private sector. And we also want to look at, beyond that, also look at the design of the condominiums, for example. There is a trend right now in the last 1 or 2 years where most of the designs are becoming more and more homogeneous. The size of the unit in terms of whether it's 1-room flats, 2-room flat, 3-room flats, the total mix tending towards homogeneity or near homogeneity. And we all know in business and marketing, when there is more homogeneity, less differential, it is very hard to put a price premium on the product itself. So I think finally, we cannot just look at one aspect of the elephant. We need to look at it from a holistic point of view to see how these charts can help us in our business, basically. Thank you.
Okay. Well, yes, Albert.
Yes, I just like to, can you have the
Okay, I'll
last
go
chart?
back.
Yeah, I just like to add my comments on this chart. I think one of the reasons why prices has been going up for the last few years is because Singapore actually, if you look at the government statistics, Singapore government actually bring in, the population growth of Singapore citizens and PR between 2005 and 2010, that's over the 5 years period, the average increase was 60,000 per year. 60,000 per year. Okay, so with this increase in the number of people coming to Singapore, these are basically immigrants. They contribute to becoming converted Singapore citizens as well as PRs. So I think the main concern is that with this increase in demand, okay, I think it has helped to more or less push up the prices. Yeah.
So we've had good demographics influences, increase in population, fairly good economy worldwide until the recession. But we were lucky too because we also had China and there was good flow of money coming into Singapore. So there we go. So those are the fundamentals, but let's go to supply, because we just talked about, Albert just talked about demand, Patrick and Ishmael alluded to the supply, so let's take a look at the supply graph and what's going on in the supply world. This graph shows statistics on the supply of uncompleted private residential units in the pipeline. The supply in the pipeline covers all of the developments under construction, as well as those in which construction has not commenced. The data for this particular graph was obtained from a combination of administrative records from Development Control Division, URA, and the Building and Construction Authority, and field surveys to update this. And I'm going to throw in another supply graph here. Oops. And this is what we call the current inventory ratio vis-a-vis the URA price index. This next graph shows the inventory ratio versus the URA property price index for private residential. And the blue line represents the inventory ratio, which I'll define in a second. And that's the inventory or vacancy level in Singapore divided by the real demand. So again, that's how many homes are now vacant that could be lived in divided by the real demand. So inventory level is modeled by using vacant stock of private residential. And that source is URA Realist. So what they do is they look on whether or not people are using that home through utility meters and other formats to determine how many of the homes that people could live in but are actually vacant. So that's how we came up with the top line. And then below that, the real demand is a combination of using resales plus new sales after TOP. And what this graph will show, it represents people who are buying property with the intention of moving in immediately, and it is measured along the left axis in terms of months. I'm sorry, the y-axis in terms of months. And so today you can see that we have a ratio of about 4.5, and which means that if we introduce no new supply and demand remained constant, it would take us about 4.5 months to sell out of the inventory or the vacancies. In other words, to fill those vacancies. That's 4.5. Now the green line is a theoretical line. I know that Ishmael doesn't like theoretical lines, but we'll throw it up there anyways because we're analytic guys. And that shows what a normal economy or market would be in equilibrium. And you can see it's 6. So normally speaking, that a healthy market will have about 6 months of inventory. So you can see that we're actually